Hey everyone, welcome back. You ready for another deep dive?
Always ready to dig into some interesting financials.
Well, today we're going to be looking at SuperMicro, a tech company that on the surface appears to be killing it.
Yeah, the numbers look great, but that's why we're here, right?
Exactly, to go past those surface numbers and see what's really going on.
Peel back the layers of the onion.
Exactly. So to start with, SuperMicro's revenue has gone from $3.5 billion in 2021
Which is, not bad.
to almost $15 billion in 2024.
Yeah, that's quite a jump.
Pretty phenomenal growth, it seems like.
Yeah, it is. But here's the thing. There's a pretty big difference between their total shares, which is 2.8 billion,
Okay.
and the shares that are actually in circulation, which is only 586 million.
So where are all those other shares?
Well, that's where things get, well, a little complicated. SuperMicro has issued a lot of these things called convertible bonds.
Convertible bonds. I've heard of those, but I don't really understand how they work.
Basically, they're like loans that can be converted into shares in the future.
Okay.
So it's a way for companies to raise money, but it can also lead to something called share dilution.
Dilution. What does that mean?
It means that, let's say you own a piece of a company, right? And the company issues more shares. Well, your piece is still the same size,
Right.
but it represents a smaller percentage of the company because there are more shares out there now.
Got it.
It's kind of like you have a pizza and you cut it into 8 slices,
Okay.
but then you decide to cut it into 16 slices. Your slice is still there.
But it's a lot smaller.
Exactly.
Right.
That's share dilution.
So how does this relate to SuperMicro?
Well, because of all those convertible bonds, SuperMicro's earnings per share, or EPS, might not be as impressive as they seem.
They're reporting an EPS of $21. Doesn't that sound pretty good?
Well, it does, but that's if you only consider the shares that are currently in circulation. If you factor in all those potential shares from the convertible bonds,
Yeah.
the actual EPS is closer to 43 cents.
Wow, that is a huge difference. So why is their stock price so high then?
That's a good question. It seems like the stock is being valued based on that inflated EPS, not the real one.
But historically, their stock has been around $5, and now it's over $42.
Yeah, it's a little perplexing, isn't it? It's like, how is this justified?
So you're saying that the share dilution and the misleading EPS are kind of propping up the stock price artificially.
Exactly. It's not built on a solid foundation.
And to top it all off, SuperMicro's predicting revenue of nearly $24 billion in 2025.
Which, on paper, sounds amazing, but
Bet.
their debt has also increased by $700 million.
Okay, so more debt.
Yeah, more debt could lead to, you guessed it, even more share dilution down the line.
So it's like they're trying to make your financials look better than they really are.
Well, they're certainly being creative, let's say.
And investors might not be aware of what's really going on.
That's right. It's important to do your research to understand the nuances of these accounting practices.
Because what looks like a healthy, growing company on the surface might actually be a completely different story.
Exactly. Don't be afraid to, dig deeper.
Ask questions, be skeptical.
Exactly. Don't just take the numbers at face value.
So when you're looking at a company like SuperMicro with these kinds of red flags, what are some things that investors should keep in mind?
I think, first of all, pay attention to the debt levels like we talked about, especially if it's increasing rapidly.
Right.
And look at the EPS, but not just the reported EPS.
Yeah, the real EPS.
Real EPS, which takes into account all the potential shares out there.
And don't be afraid to ask questions like, why is the stock price so high if the real EPS is so low?
Yeah, sometimes you gotta be a little bit of a detective.
So is this something that you see a lot in the tech industry, this kind of creative accounting?
It's not uncommon. I mean, companies are always looking for ways to, make their numbers look good. But it's up to us, the investors, to see through the smoke and mirrors.
Exactly. And I think that's a great note to end on. Always do your due diligence, be skeptical, and don't be afraid to ask tough questions.
And if something seems too good to be true,
Yeah.
it probably is.
Thanks for joining us for this deep dive. We'll see you next time.
See you then. Bye.
Bye.